Hey, hello. This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, where we quickly look at the technical charts and try to understand what happened in the market during the day and plan for a better trading day for the next coming day. That's December 14th, Thursday, tomorrow, 2023. Tomorrow is an expiry day for the weekly expiry for the Nifty. So we had a flat close today, absolute flattish close once again, and we're still in the consolidation range on the top, very top in the mid of a rally. We're not retraced much. Let's get into the wrap up. So wrap up will come back. Before that, we'll go to the candlesticks. So this is the Nifty chart that you see here. Plain chart. If you see the candlestick pattern, this is a doji. It's indecisive. It is known as a dragonfly doji pattern. This is extreme indecisiveness. It also indicates, the wick size also indicates that there is a big support from the downside. There is a big fight between the bulls and the bears, is sure. So there is indecisiveness is what the candlestick pattern of the Nifty shows. Banknifty also shows a small body. Every small body is indecisive, and the wick size indicates there is a good support bounce that happened. Intraday, it was very volatile, right? It did V-shaped recovery after moving down, right? Banknifty also intraday was very volatile. It did a dip and then got bought in and then moved up. That's really what happened. Now, where are we with respect to the? See, this is a trend line channel, and we're at the very top. We're not retraced much. Right? Today was probably the biggest retracement that has happened, up to 2770 or something, right? But we have a gap here, right here, 2696, 2700 gap is a good support. That's where the consolidation ends on the downside. Upside, we have the all-time highs at 21 and 37. So it is, for the last 7 days, it's consolidating within the range at the top. So that's where we are. Supports would come in at the gap first 2700, then 20 exponential moving average 2500, then another gap and 20 exponential moving average is coming at 2400 and 2300. That supports. That's the immediate support that you see there. Upside, the first resistance will be the all-time high at 21,037. Then 2100, 2200, 2300, 21500 nearby zones will be a Fibonacci extension 78. So there could be the worst resistance that can come upside. And downside, we already see that. So Banknifty, we can see that last 7 days we are consolidating in a wider range of 1000 points nearby. Today we have a hammer, a red hammer. That's also an inside bar. It is very much inside yesterday's bearish candle, and it's simply consolidating within the range. Unless it breaches this 46,500 zone. So that's a gap support as well as a consolidation breakdown. So once that is breached, then we can have some down move until 45,500, which is a 20 exponential moving average plus 38 Fibonacci retracement levels. So that's where it is. Upside, first resistance to take out would be 47,600. That's for the all-time highs. Then 48,000 is good resistance because it's a rounding number, and also it's a Fibonacci 78 extension. Right? So that's the levels on the upside and outside. Right. So we have the consortium on the top, and we have indecisive movement. Right. 1 day ahead of an expiry, and also a Fed policy decision that is coming tonight. So that's why there is intraday high volatility in Bank Nifty. Expiry was also there today. So that's what happened today. Let's just go and see the wrap up. So we closed flat, positive, but in the Nifty slightly positive, 0.19%, and we closed flat but negative, very flat, 0.01. As flat as it can be on the Bank Nifty. Both we are consolidating at the top. We are seeing Bank Nifty managed to close above 47,000, and Nifty managed to close above 2,900. Right? FS, today's data has not come in, but they were buying the last 2-3 days. Last 4 weeks, net to net, week to week basis, they were buyers, which is very positive. Today's data, they might have bought. It might be just like 2 days. Yesterday's, that's what I believe, but somebody might have bought either of them. domestic positions or foreign, otherwise market would have fallen big. There was some recovery that happened. That means somebody was coming to buy the Fyers. And the resistances we already seen that, we're not repeating it. Momentum is bullish, continue to be bullish and rising on Nifty, and bullish and falling on Banknifty. ADX indicator is used for knowing the trend also in the short term is bullish. BMI positive zones. India makes cool of 5% after some time. So that is ahead of the event. Even before the event is there for tomorrow. That's on the US market, but we have cooled off today, it's in 5%. But we had not, remember, we had been spiking up and the market was moving up all this time, and the market is falling, then this cool off is happening. It's opposite to what's normally. So there is divergence even in this phase also in the India weeks. But the IVR, the implied volatility and the realized volatility, that spread, the difference between that is within a medium range of 30 to 50%. So it's still good for the sellers or option sellers on the Nifty at least. Right. So intraday it was very volatile today. But finally, overall, the India VIX has cooled off 5% when the market didn't do well, which is the divergence just the other way. It was like the India VIX was spiking when the market was doing on. No, market is not doing that great. The India VIX is cooling. So it's opposite. So yeah, that's about that. So there's an event that is there. So a lot of data is coming in the next few days. So there will be volatility that can be expected with respect to the VIX and volatility. Now, Bollinger Bands, if you see, it's still the expansion. It can clearly be seen. Expansion is on the upside. It has not started contracting on both the indices. We can see that. That indicates that the price can move further up. It had fallen down slightly, slipped from the walking of the bands, but it continued to be on the upside expansion as per what it predicts Bollinger Bands. So technically, it's extreme bullishness that we are seeing, although we had small retracement, very small, but that's not even retracement, it's just consolidation in a very tight range. And that too at the very top is what happening. Right? So we're extremely cautious because of the fact that the retracement has not come after some vertical move, as I had been saying in the last many days. It's a repetition of the same. Sectorial major industrial sectors, if you see, it's green except one place. The IT sector has not moved green. And except so. Otherwise, all these major sectors have worked the bull zones in the short-term point of view. Now, if the top 7 heavyweight stocks that contribute maximum to the index, you see, except the Infi and the TCS, all of them are in the bull zones on the short-term. Infi and TCS fall down 2% something today. So, IT sector is tepid because of probably the expected Fed event volatility, I would believe. Right, US markets are on the top. Green, and it's very close to all-time high. Anything could happen from here. It's a wedge top. So it had been moving up since last several weeks, and probably anything could happen now. There could be a reversal that can happen. That can come in as part of tomorrow's Fed event outcome, or it can come in later after some more consolidation and some more pullbacks. So you never know what happens. So it's very crucial from the global indices perspective. Dollar is spiking up slightly. Rupee remained also spiking up, and that means USD and rupee is remained to be still weak on the top, very top. Crude has fallen slightly, but today there's some spike at the bottom, so it has gone as below as 470. In that range is where it is. Gold is also fallen prior to the resistance after profit booking came in with a new all-time high. Now it's trying to consolidate, and small green is seen today spike. Yeah, it's the Nifty expiry. Forgot to update this. So Nifty expiry levels, we'll do it right away. So this is the Nifty expiry. So oh, sorry about that. Small delay. And let me just get in that. So Nifty expiry for tomorrow's expiry, the highest put trading is call trading is here at 21,000. So 21,000 and 20,500. So it's a 500 point range, right? 20,500 to 21,000 is the range of Nifty, right? So put call ratios, if you see, it's 0.79 is not bullish enough. Right, so PCR is not bullish enough, right? So in the chart, if you see, the levels that probably is 2500 and 21,000. So it's the same thing. So what the call writers and put writers are seeing in the open interest is the same thing that the charts are showing. So levels are very crystal clear there. Otherwise, this is probably time for some not much moved up stocks, quality stocks alone, and not no stocks that have moved up. Because value investing time is over, because the market has already hit 21k vertically up just like that. Now retracement has to come in 1%, 2%, 3% like that for you to buy the dips or in the heavy mode. So moment investing can still be done whether there is a dip. Breakout happens, buy in, and then breakout stops, sell it. So that can still be done from the investor point. Traders point of view, it's very clear about the direction now. Earlier sideways moment, we don't know what happens, right? Now the direction is clear. We know it's consolidating. We know there is a little bit retracement and all this. The only thing is, you have to be cautious. If the retracement can be sharp or can come in when nobody expects and all that. So you have to be cautious about blindly being long, right? So, but overall market direction is very much clear. So tomorrow the Fed event outcome will come probably tonight or tomorrow. So some volatility may come in the market in the according to that. So tomorrow anyway volatility will be there as part of the expiry. So this will get added to that if that is. So US Fed decision is considered to be no change, because maintain status quo is what is expected, I think, because they had given the clues. Powell had given the clues bill, but anything could happen. Market could surprise you. So slightly be cautious about the fact that we already run up. US markets have run up. We have also run up substantially, right, from the previous big vertical move. So anything would happen. If breakout continues, well and good. But the levels and the probabilities is all in our hands. Manage your risk and then protect your capital that way. Right, reduce your position size with a spike move. As of now, it seems to be good for the option sellers. Right, that's all I have for tomorrow. If you're not subscribed, subscribe and share to your friends and colleagues. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.